We'll see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Headed to the top. If we're not already at the top, we're going to the top.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go.
Welcome to the nest. See you on the show.
Good afternoon, ladies and gentlemen of the Rollup Army.
Welcome back.
Robert, great to see you. Great to see you today,
Andy,
man.
Andrew, Mr.
Great to see you, Robert.
Mr. Duca.
I am back in New York.
Mr. Duca Top Blasta.
After I did some top blasting in Argentina. You know what I did? I took a big step away from the markets in 2 weeks down there, Patagonia. skied a ton. We had beautiful snow. We had the biggest snowstorm 25 years in Chile and in Argentina. I went down. It was insane. I learned how to put snow chains on a car. So that is something that is not easy to do, to put snow chains on a car and take them off in blizzarding, rainy conditions. Driving the car through the mountains, we saw some Andean condors, these big birds with wingspans, quite wide.
I saw some of those in Peru.
Quite rare. The Andean condors?
They're the largest bird in the world.
Saw some Andean condors.
They're massive, yeah.
They were floating through the sun or through the wind in a beautiful day. Patagonia.
They look like turkeys, but they fly.
They were massive.
And turkeys don't fly because they're so big, but Andean condors are both big.
They have this beautiful like white kind of flap on their wing, the blackbird. Beautiful. Skied some of the best powder I've skied in my life. I mean, it was nonstop. I mean, we got days where we woke up and we had gotten 8 inches overnight. 8 inches, 10 inches, 12 inches. I mean, we got unreal powder. So, yeah, I mean, it was a pretty great trip. And
I think we're having trouble hearing you, Andy. I think we have
no, buddy. It is good old Atan with the tabs open on the old Mac Mini for the Mac Studio. I requested.
All right, I think we are indeed having trouble hearing you, unfortunately.
No.
We want to hear all about Patagonia. We want to hear all about the Andean condors, and maybe it's just the meeting.
It is just the meeting, man. It is just a meeting, guys.
All right, there you go. Feel free to rant on about Patagonia. Yeah, it's a great, beautiful area.
Thank you, team.
Down the ship, and tell us about it.
Nah, it was fun, man. It was fun. Just go ahead and mute me in the meet, and I'll throw it on their side here. So yeah, I mean, it was super fun. We had days where we skied like 8 inches fresh powder. I mean, we had a day where we got to the top and we were told that this was the only way down, and we got to the top, was blizzarding, whiteout, couldn't see anything. A friend on the trip got really upset, took the moto down, the ski mobile, got flipped off of the snowmobile into the powder. It was hilarious. Just had an insane ski trip. And then we also just ate a bunch of really good steak, and it had tons of wine. And we didn't spend more than like $150 on a meal for 2 or 3. No more than $200 on a meal for 4 for all the steaks, appetizers that you could want. Argentina is one of the greatest countries in the world. I saw our friends at Aligned, RJ and Mauro. They took me out to a nice little beverage in Buenos Aires last night. And I got ungodly sick and had to spend the last 48 hours under the weather. So, yeah, I mean, overall, I would say it was a pretty damn good trip, Rob. And it's good to be back. It's good to be back in the city.
We're good to have you. Glad to have you back.
Yeah.
And, glad you had a good trip down there. You were sorely missed. We had people asking for you in the chat. We saw some messages in the chat. So we appreciate
how's the chat doing?
You rocking with us all the way from Argentina.
We got some super chats flying, huh? What did I miss on the show?
We're flying. That's a good question. I mean, just yesterday we had a good institutional segment with CEO of Zero Hash. We had a bunch of good guests over the last week or so. I mean, frankly, you couldn't have gone down there in better market conditions. I mean, where else?
Tell me about it.
Where else do you want to go during apathy?
Nothing changed.
Just pure apathy. Obviously, we've been. I'm sure you've checked the prices once or twice while you were over there.
Nothing changed.
No, we're pretty much right where, if you bought Bitcoin 10 years ago, or you bought it last week, or not 10 years ago, you bought Bitcoin 5 years ago, you are right where you are. And if you bought it last week, you're right where you are. And if you bought ETH, anytime in the last 3 years, you're, right where we are today. So not much has changed except, a little bit up, a little bit down, and sideways, whole lot of sideways. But we've had a bunch of good chats on the show. A lot of deliberation on whether we do get another leg down, how long this apathy lasts. We had Matt and Ryan from Bitwise yesterday, and you know how much I like these generalists, like these guys. They don't come on and talk their own book, like these guys that actually have their finger on the pulse of the markets as a whole. And Matt said something really interesting actually about this bifurcation. because we see it. We see the revenue meta. We see, I mean, heck, you coined the revenue meta. So, you know, we're deeply familiar with this. He says on one side, you've got institutional investors that prefer things, and he sees this. They prefer things with monetary premium.
Yeah.
We know there's like 2 coins, maybe 3 coins that have this. It's pretty much just Bitcoin and Zcash and maybe ETH that have a faction of monetary premium. And then you've got, but institutional investors are preferring that asset class. And then you've got the crypto native investors that prefer like the revenue driving, you know, fundamentally driven asset class these
days. And it's honestly not been easier, man. Like I got long on Pump in Patagonia and hit a big win. It's just like, oh, look at the revenue. It's flying. Finally getting some attention. Broke those technical levels that we spoke about on the stream a bunch. Get long, boom, win. Lighter, boom, looks great. So, I mean, dude, it's never been easier. I mean, you got like, now you've got Hype, Pump, and Lighter. And I mean, you could throw in a couple others making some decent money in there. Uniswap's, Aerodromes, Nears, etc. And then you got like these privacy things. So yeah, I don't know, man. I had a bit of a zoom out. I mean, I'm just trying to accumulate as much Zcash as humanly possible in the next 6 months. So by the end of the year, I mean, I'm trying to get to a number of Zcash units. I'm about halfway there, I would say, that I'd like to get. So in a weird way, I'd like to see Zcash trade in like the 300s again, or 200s again.
I don't think we're going to get that.
Yeah.
So it was interesting to hear these guys talk about how we haven't quite seen institutional investor interest in the revenue meta. That has primarily stayed in the monetary premium class.
Nah, but come on. What about the Hyperliquid ETF that they launched? So they got the biggest ETF launch that they've ever done.
Yeah, Hyperliquid being the exception. Everything else in the revenue meta asset class is being driven by crypto native flows.
Well, yeah. I mean, think about all the VCs and liquid funds who were stuck with all this garbage on their books. And all of a sudden, there's like actually quality investment. Like, dude, Pump is the greatest one right now because I don't know if you have any Pump or not, but I would be fishing on dips for sure because it is the most hated one because, and I'm trying to fish on dips as well. It is the most hated one because it is such a bad rep, but like for that reason, because it's like the meme coin, trencher coin, all the like professional allocators who are like too good to like buy it have been sidelined and they'll still be sidelined. And like, I don't care. Like, I know there's moralists out there and that's fine. I mean, you could have a long conversation about Pump's business and the value of speculative tokens on chain. You can have a long conversation. I don't really care. That business is making money. In my opinion, it is not that morally corrupt. Now, there's a difference between like funding a business that makes money off like selling guns worldwide or illegal activity worldwide, but having some degenerates speculate on 10K market cap shitters, I don't really see that as that big of a problem considering how big sports betting is, considering how big poker online is. It's all the same. It's all the same category. And so Pump, though, is cooking revenue and the market cap's really low and people won't buy it because they don't align with the values of it. You know what we align with here on the show, Rob? Things that make money, things that buy the token back and treat the token holders well. And Pump is, I came to learn, the reason why I put on a big Pump trade like the last, 2.5 weeks was one, I saw Thread Guy and Ansem be like, yo, this thing's gonna fly. And I was like, all right, well, Thread and Ansem are gonna start publicly promoting Pump, then all right, well, we might as well get in on this too. That's one. But two is like, you look at the numbers and you're like, okay, well, the revenue has been significantly growing, outpacing something like Hyperliquid with a much higher valuation. Nobody wants to get involved on this. The token's been battered. And over the last 3 to 4 months, they actually started programmatic daily buybacks. If you recall, the whole debate between Pump and Hype was like, oh, Hyperliquid has more trust because they buy back in the team and there's trust. And it's like, Pump, who knows when they do their buybacks? Look at Pump's buyback schedule. They just buy back every day now. Like, I don't know exactly what portion of the revenue is, but they just do daily buybacks, like nonstop. And so for me, it's like, if you think about it, all it's doing is just making your share of the network grow over time by holding the asset, right? So like you hold one Hype today, in 5 years, that one Hype is going to be 1.2 Hype. Now, obviously the numerical value isn't going to grow, but the total supply of the asset's going to be taken off the market. Same thing with Hype. So like Santos wrote this whole thing about how crypto assets don't create the same wealth effect that traditional stocks do and equities do, because you don't gain wealth over time. You get diluted away by investors. There's no token holder buybacks. But there's now starting to be assets in crypto that actually allow you to park your money in them. And now, again, your numerical or quantity or units of that asset isn't going to increase. However, your share of the network will increase because the total network size is coming down due to these buybacks and kind of burning, or at least, putting in the assistance fund, whatever you consider to be. So anyhow, that's the pump trade. And I think it continues. And I think it's a hated rally. And I think it's beautiful. I think it takes you into the whole applications making more money than base layer, why pump's going to outperform Solana, why Lighter's going to outperform ETH. I did Hyperliquid in ARB. You were like, bro, that's stupid. Maybe it's Hyperliquid in SUI. Maybe it's ETH versus Bitcoin, and maybe it's Zcash versus Bitcoin. So anyway, that's a rant on pump. And I honestly think we're still early on it.
On the buybacks being value accretive thing, Ryan from Bitwise made a great point. We were playing kind of this game at the end of their segment where it was essentially over under, and a bunch of guys from the chat, I think it was Edward, that put out a bunch of price targets by 2030.
Yeah.
One of them was, I think it was $500 hype. It might have been more than that, but I think it was $500 hype.
Yeah.
And Ryan said, look, I think it could go over, but come back down by 2030. And the reason he said, and then Matt was in disagreeing, 10x, that's a 600, whatever he said, $600 billion market cap or something like that. But then Matt corrected himself and he said, look, if we're just talking price targets, in theory, Hyperliquid could trade at $500, but actually the market cap could go down because they're burning the supply.
Yeah, I mean, that's a bit egregious, but that's the point.
Like
the one hype you own today.
It's not going to be 1-to-1. They're not going to grow. Like the price can go up 10x to 500, but it doesn't mean the market cap is going to go up 10x, right? Because if they burn half the supply, the market cap could go 5x, price could go 10x.
Yes.
Play with the numbers there, but you don't have to put together these outrageous market cap forecasts to justify pretty nice growth projection on the price.
In other news, shout out to Plume. As always, we're here back in the Nest and Tokenization Tower, live from the financial capital of the world.
So let's close the loop there. So let's talk portfolio. Obviously, Pump Fund is a significant part of the portfolio. Lighter as well.
Yes.
Talking about some of these things.
Yes, I'm currently long on near perps on Lighter and
give
Pump.
us a Patagonia portfolio update, Andy.
Dude, I am long on Pump and Lighter on near perps right now, which basically trades on Hyperliquid underneath. It's one of the best products I've ever used for trading perps. It's literally just finger scan, dome, done, connect, passkey. You can trade, swap, bridge. We're going to have a roll-up version of that coming out soon. And then I have some Chainlink, a ton of hype, a ton of PER, the digital asset treasury, which I'm still stuck underwater on. Shout out to Global Flows. I got some Bitcoin, and I am buying as much Zcash as humanly possible. After speaking with a couple Zcash whales, I realized that my Zcash units targets are far too low. This is the cabal that we need to be a part of long term. This thing is going to $10,000. I don't really care how long it takes. I will be on that trade. I will be on that. Then, of course, you got some Near, you've got some Arrow, you've got some random shit coins on FOMO. Like, let me pull up my FOMO. What did I buy on FOMO? I bought Ansem's meme coin. I bought Mike Dudos's meme coin. The FOMO guy sent me the random trenchers trying to get me to CTO a meme coin. Have not decided if I'm going to do that yet. I got some fake world assets. I don't know why I bought that. I kind of top blasted that thing. What's new there? I got Epic Duck, Toad Pepe, and Cash Cat. And honestly, Cash Cat looks ready to go. So yeah, I don't know. I got like $1,000 on FOMO app just to go on FOMO. So if you guys want to see what I'm doing on there, you can see it. I'm on there on Twitter. It's connected. That's my portfolio right now. What's yours looking like?
Pump, Lighter, Hype, PER, bunch of Zcash,
Bitcoin, a little bit of ETH, a little bit of Arrow, a little bit of Near.
Yep. I'm in a similar boat, man. I think Zcash, Near, Arrow, little bit of PER, and then some pretty sizable Bitcoin, hyperliquid ETH, and then some like smaller bags. I still like Akash.
Yeah.
I think it's going to be a pretty nice benefactor of some rotational flows.
New Type says he's taking the Zcash pill. I think you should, man. Naval, Balaji, Mert, a lot of the OG Bitcoiners are in on it. Closing my short profits from 530. Now looking for a Zcash long. I'm not even trying to perp trade Zcash, man. Rob, I think you should sell like 80% of your Bitcoin for Zcash. I think you should just send it, man.
I think both are going to do extremely well. I think
but if Bitcoin goes
the class
to
of
one
monetary premium assets, and I think Bitcoin, Zcash own that. ETH has like a little bit in there, and then I mean, look, we're calling them out. And you could even say Hyperliquid maybe belongs in there, but they're more fundamentally driven. So Hyperliquid is kind of like the kingmaker of the other asset class. Hyperliquid. I do think some of these stablecoin protocols are going to do extremely well once rates adjust.
Which one's the like Circle?
So the Bitwise guys were very bullish on crypto equities, and there's a whole I don't know if you saw, but I think it was Anthropic signed a $9.1 billion deal with Riot, which was typically a Bitcoin mining company, public, and has contributed almost all their hashing power over to AI compute. And VanEck has an ETF that tracks these miners that are now pivoting and getting like exorbitant amounts of demand because they already have the infrastructure built out. So I think that ETF could do extremely well.
Interesting.
Then there's crypto equities that I think have just gotten plowed.
Dude, yeah, Circle looks insane, man.
I think they're going to get a meaner version. I think Circle and Coinbase could actually bottom out pretty soon. And then I think the stablecoin protocols that I'm talking about are more like Sky, Athena. I think if rates adjust, I think these guys could do pretty well as well. Frax also actually looks pretty good. And so I think those guys are going to do pretty well and get some more flows. But yeah, otherwise, I mean, just buy the things with the revenue and try to make sure that the revenue is going to the token.
Yep. All right, let's roll in. Nice portfolio update from the lads there. Let's get into the show today. We got markets, we got weather, we got topics, we've got we're here obviously back in the tower, so it's great to be back. Thank you for everybody who's been tuning in. Our YouTube is cranking. Business is going well at the Rollup. Again, we're seeing Bitcoin companies scale back to Bitcoin mining capabilities, getting hard to be bullish on Bitcoin. I agree. I am honestly looking to sell the majority of my Bitcoin to Zcash. So that is still a work in progress for me. I've got some loopholes and jumps to hoop through to get to my Bitcoin, which is kind of the whole point of it. We've got Markets and Weather live from New York and Panoptic's founder talking Uniswap V4, what they're doing as well. But honestly, guys, we got a show, just Rob and I today. We're just going to talk markets, what we're seeing out there, numbers, charts, news, and more. So good to be back in the town here. Let's keep it rolling into the weather. Before we do, let me tell you about Denari, building infrastructure for tokenized US equities and bringing real world stocks on chain. Visit denari.com to trade SpaceX on Hyperliquid as well. Guys, it is a pretty hot day in New York. It's 92. It's sunny. It is steamy.
Oh my God, I thought that was Florida.
It is steamy.
Sounds,
it is steamy.
Very similar to the Florida weather that we've been reporting on.
Yeah, the studio is not too hot today, so that's good. We don't have any guests today.
The weather report call for more apathy in the markets, or are we getting dumped on, or what's the weather report?
I don't know, man. I was getting dumped on. You know what I love about when you go somewhere where the sports are the main prerogative is that your life revolves around the weather. So like my plans in Argentina, and I mean, thankfully, the friends are like good skiers and like skiing, and the girlfriends are also very interested in skiing and good skiers. So it's not just like selfish. Kind of can get to be that way a little bit when you're like, all right, well, we can't do this because we need to do this because we have to do this. However, that being said, if it's gonna dump on Tuesday night, then I'm not drinking on Tuesday night because Wednesday morning we're up at 8. We're up at 6:30. We're on the mountain at 8. Yeah. And if there's no snow on Thursday, if it's not going to snow and it's going to be windy, then we're not skiing. We can do whatever we want on Wednesday night. And so I love that. Like with surfing, it's like there's waves coming in or there's good sun. It's just a vibe, man. It's just like you live your life by Mother Nature's rules, right? Not by like some bullshit alarm clock that fucking the New York City subway has you on.
Right. No, it's more, you're more connected.
Truly connected. Really, Rob. That ayahuasca's coming out, man.
Let's get to the markets because that's what you guys want to hear about. Before we do, I think Andy's going to tell you about Frax.
Hey, let's do that. Frax.com. Visit Frax.com to learn more about what's going on over there in the stablecoin landscape. Open, digital, borderless. That is Frax.com. Future of digital money. Here we are. Bitcoin's red. Ethereum's green, barely.
Yeah. Do you think we're going to see more of this? Like,
Dude, Chainlink's having a hell of a run. Actually, off the lows.
So I think unsurprisingly, or maybe surprisingly to some, Chainlink is part of that revenue-driving, fundamentally driven asset class. And there is real value accrual to the Link token.
Yeah.
They've been kind of flying under the radar because, Hyperliquid and some of these perps exchanges get a lot of the attention in that regard.
Yeah.
But, Chainlink is firmly within there. I saw an update on the LVR that they have coming in.
Yep.
I think they've been able to generate somewhere between $7 and $10 million via this liquidation protection. Basically, all the MEV bots, when there was a big market movement and a bunch of liquidations, they would previously recoup that. But it turns out, with SVR, it's just a technological innovation that helps people keep their money. And Chainlink has been able to, bring in upwards of, like I said, 7 to 10 million. And a lot of that is going to the token. I do think Chainlink, because they're so connected with the DeFi ecosystem, with several both institutional and on-chain native partners, are in a tremendous position to benefit from not only the Clarity Act, but also the reg crypto that we see the SEC talking about this week. So I think
it's coming, isn't it?
Yeah, I think there's plenty more things that are coming down the pipeline, and we're not going to have to wait till September.
Yeah, love that. Beautiful. Well, as always, our markets are powered by our friends at Zama. I don't have much more to add. We talked about the markets. It looks, hype looks pretty good. It's kind of breaking out now, finally, off those lows. We'll see what happens. And Lighter looks good. Pump looks good. Zcash looks good. Per actually looks good for the first time in a long time. Yeah, all things considered, we just need Bitcoin to not nuke right now.
This has been the fundamental question, is how, is there another washout? And whether there is or there isn't, how long does apathy continue? How long does it last?
Better get a Cash Cat NFT. The floor is rising. So NFTs are back on Robinhood Chain. Is that what's happening? As always, our markets are powered by our friends at Zama, bringing confidential blockchain infrastructure using FHE, privacy on-chain applications, and more. The market here wants to lean risk on. Oil, CPI, still kind of keeping people a little bit shaky. I think CPI today came in basically at what was expected, so that was good to see. And yeah, I don't think we have many macro events for a little bit while. Well, what we want to see is we want to see Bitcoin go to 72 here. That would put a party on for everybody. Don't know if it has it in it yet. May need to test some more bids slightly lower before doing that later in the year. But yet to see. Let's keep rolling into our news section.
Yeah, I do want to mention on the macro front, there was 2 Arthur Hayes articles that came out, and I know this guy is just, he's been all over the place as it comes to his like specific picks and altcoins and everything, but I still consider him one of the smartest macro minds in the space. There was 2. One of them is on the AI rotation out of AI and into crypto, talking about how as we continue to invest more into AI, the likelihood of misallocation of capital is increasingly more likely. And as capital is misallocated, Bitcoin is the first to react. Bitcoin sniffs out misallocation of capital, whether that comes directly from the money printer or misallocating into asset classes that don't return that investment. Bitcoin is the first and strongest at sniffing that out. Pretty good article. I don't know how quickly that's going to happen, but it does feel like we're just going to accelerate into an inevitable brick wall of capital, and whether that's a bailout or what, we're gonna have to reconcile all of the capex that's going into what we're describing as a technology and infrastructure build out, but it's more so a real estate build out. And there's not the type of returns in real estate that we are projecting because we're putting technology multiples on it. As Edward says in the chat, Yahtzee.
Yeah, what about stocks just consolidating above all-time highs? Like S&P is just chilling above its all-time high, and NASDAQ looks basically ready to push up. Like Bitcoin hasn't moved. Like, I mean, all this fugazi about this and that and the other, and like PER's up 5% today because the NASDAQ's up. Like I'm over here screaming. The last 2 months, I was like, I hate the NASDAQ. Why am I owning an asset that's correlated to NASDAQ? And I'm like, wait, why was I ever worried about fading the fucking NASDAQ?
Yeah, the NASDAQ's built to go up, and I don't think Warsh or Besant are going to let it go down, especially not ahead of the midterms. Then you have Besant intervening, I guess.
In Japan,
in Japan, which is huge.
Yes. Basically shows that no matter what, they're not going to let Japan's yen, dollar, forex problems affect the global markets.
And yeah, Arthur's last article walked through the mechanics of how anytime there's an intervention, such as the one in Japan, the only option of intervention is money printing. Then
you've got the fiscal deficit coming up and all the heightened attention around that. It's just so funny how it all just lines up for the 40-year cycle.
Oh, yeah, man. It always
does.
does.
It just always does.
Gold had a big pop.
Big bouncing. Maybe we get a rate cut in the next 6 months, like next year. Like it's just hilarious, man.
Warsh had his opportunity to raise rates when the market was sort of ready for it. He didn't. He held them steady. Don't think he's going to want to raise rates. Nope. He's got, this Jackson Hole speech coming up next week, I think. Don't think it's going to be anything material. We know he doesn't want to do any forward guidance. No. I think he's just going to kind of let the market do its thing. And we saw CPI come in today right at estimated. So the economy, from my perspective, the economy is doing pretty well. That's why equities continue to do well.
Yeah. All right, guys, let's get to it. Let's get into the news and more. Let me tell you about Near first, your home for building, using, trading, perps, swapping, and bridging on chain. Visit near.com to learn more. Very soon, guys, we will have a near.com roll-up version for you all to trade on, which should be really great because you'll be able to use this to trade on our website. And it's kind of like the next iteration of what we're trying to build out for you guys. Edward, great to see you again. Freedom Guy, I missed you. Super Hex Guy, not going to answer your question about Pulse. Mr. Lighter, good to see you as well. I've seen you in the chat more frequently. It's good to have you around. And good to see you back. Good to see everyone back. Hype back to 57, guys. I feel good about this. Let's keep it rolling. So
this rally will fail like all the others?
Oh man, I mean the rally needs some love. I'll tell you that much.
I thought you were going to say sidelined.
Sidelined. Oh my gosh, guys! These people on FOMO want me to create this meme coin for you guys so bad. It's honestly so tempting, but I feel like the brand ramifications are so bad. But I already know I could have my FOMO wallet with 7 figures in it by tomorrow. I think if I just bought the coin and tweeted it, but not going to do any of that nonsense.
Paper wealth is all we're going for here.
Crypto Twitter struggling to realize 2 opposing ideas can be true at the same time. The vast majority of meme coin activity is a waste of time, a zero-sum game, and you can absolutely avoid them if you want. Or the on-chain social trading apps enabling 100K daily actives are a glimpse into how investing in social networks will look into the future. And you should actually absolutely check them out if you don't want to. This guy is entirely correct.
Well, this isn't
exactly the take. This is the it's an and.
The take is that this is an and.
Correct, which is entirely correct. Because that's why I downloaded FOMO. I mean, I was like, all right, let me try this out. All right.
Yeah, I mean, the thing to realize as to, you might be thinking, how can both of these possibly be true? But you know, it's the same thing that it always is. It's time horizon. And so, what Luke doesn't say here, but if you read between the lines, the vast majority of meme coin activity is a waste of time, zero-sum game. Right now, that's the case. The on-chain social trading apps enabling 100,000 plus daily active users are a glimpse into how investing in social networks will look in the future. Yeah. So he's juxtaposing these two views where right now it's a total waste of time, zero-sum game. But in the future, this is how things will look, especially once we proliferate actual sustainable asset classes like tokenized equities. Look, I was on this show like vocally bearish on Solana because it has not and still hasn't escaped the pump fund, meme coin, trenchers, optics. And I was saying how they are never going to be taken seriously. There won't be any institutional capital. They will fail to gain market share in any sort of, legitimate business class. I think Luke's second point here indicates how there is a path to success for Solana.
Oh, yeah.
I think, yes, right now it is still dominated by exactly this FOMO and pump fund meme coin meta. But I do think that these same mechanics, these same mechanisms and apps could also be utilized by more legitimate younger investors that aren't looking for meme coins, but are looking for legitimate asset classes, and could enable them to invest. And I think if we can get tokenized equities to a ubiquitous point on chain, FOMO and pump fund are going to have, they're going to do extremely well with this asset class. So not to say that's going to benefit the Solana
That's what I'm saying.
token as an L1, but I think there is a path to success.
It would. I mean, more activity. Obviously, if you look at Solana transaction activity, let's say the last 3 months versus the last 12 months, I would easily argue that in the last 3 months, there's been more actually, I would say there's more transaction activity in the last 2 months than there has been in any 2-month period for the rest of the year. Somebody can fact check me on that in the chat, please. But that would be my take, right? And that is because of what's happened with FOMO. But my take is, if this is what you're bullish on, then you're buying Pump. Pump
You're not
makes
buying
more money than Solana does when you factor in inflation and emissions.
Right.
Sure, you can factor in unlocks for Pump and kind of count that. But right now, Solana is still operating at a net loss if you consider staking yield as an expense. And there is a lot of debate about this. And Max Resnick has a take, and maybe he'd be a good guy to get on, Rob, and you guys can go at it as to why, because he's all Solana pilled now.
I mean, look, I expressed a more bearish sentiment than I'm expressing today. Now I'm saying there is a path for Solana to sort of grow into, like on-chain capital markets, which could include both meme coins and legitimate asset classes.
But not enough for you to add it to your portfolio in meaningful size over
not
Hyperliquid
Solana
or ETH
necessarily, but Pump, I think absolutely. If you just value these things based on businesses, and I think that is what we're going to end up getting to.
I think that's where we're at. I think that's why we've been ahead. I mean, that's why we hit Hype. That's why we're on Lighter. That's why we're on Pump. Like, people have still not wrapped their head around the fact that, like, you just got to buy the businesses that are making money on chain right now. That is what's going well.
There's also zero momentum. Like, there's zero momentum for anything in this
100%.
Digital asset class at all. It's totally driven on fundamentals. And typically
flows.
people, flows, but like, how are you going to determine the flows? Like, where?
Well, that Pump's going to buy your bags today. You know that every day Hype's going to buy your bags.
Sure. If you want to factor in programmatic buybacks as flows, it's not like institutional or investor like retail flows that are coming into these that you can really identify. But you can say, like, it's getting this much money, and they're spending this much money, and it's trading at this price. Like, there's just, whether it's a discounted cash flow or a price to earnings, like, there's ways to value businesses that we typically haven't utilized in digital assets because we've relied on Jevons paradox network growth models for creating new forms of money. Total, like, fugazi, total new concepts that apply to Bitcoin, but we've extended those principles into the thousands of other coins in this asset class. And that was an unfair and unreasonable extrapolation. It's now time to start to value the rest of the assets besides the two, right, that we want to count with monetary premium, the same way we've identified, valuable under priced business opportunities, discounted cash flows, price to earnings in any and all companies.
Edward says
this asset class is not different.
Edward says, drop the meme coin, Andy, and give it to us now. I have FOMO. Dude, I know, Edward. I mean, it would be hilarious, man. It would be hilarious. What's up, boys? OG Killa, good to see you. Plan B is still adjusting. Is stuck to flow model, and Vitalik is still not impressed.
Andy, the other thing I was going to mention is that, I think it was probably right when you left. It was early in the last week where several of these layer ones came out with proposals to reduce their inflation.
Yeah, and I also saw Sui was doing buybacks now.
I think more and more teams are recognizing this. An L1 that doesn't generate revenue can't necessarily use the revenue to buy back the token if the revenue doesn't exist. ETH and Solana
Maple
right?
Syrup just turned on their buybacks. They just passed their proposal as well. Maple Finance just did that.
There's two things happening here, right?
There.
Which is that the app layer is turning on buybacks, and you can only turn on buybacks if you have revenue, right? So that is certainly happening. We have no, I'm not disagreeing with you there. I'm saying there's another thing happening, which is that these previously identified Jevons paradox network things, the ETH, the Solanas, you can even
they're trying to lower their issuance. Solana, ETH, they're all trying to lower they're trying to make their P&L statements look a little healthier.
Yeah, and I don't know if you saw this, but the community came out in force against these proposals. At least they did
on Solana and ETH.
Yeah.
Wow.
And
why?
I think, and I'd love to have someone come on the show and talk to us a little bit more in detail about this, but I believe it's because the DeFi ecosystem is so dependent upon the staking yield. There's not a small set of validators that are getting rich because they have very low expenses and they're getting all this upside in the tokens. No, it's this decentralized network. There's applications and interest rate environments on chain that are built on the back of the ETH staking yield and the Solana staking yield. These are distributed validator sets. And so a lot more people are impacted by this than the hyperliquid validator set, for example. So there's that. You also have Bitmine, for example, or SharpLink, who, Bitmine has their preferred that they offer at 9.5%. A big portion of that was, that there's native yield in ETH.
Yeah.
If that evaporates, that's a big detriment to their value proposition, their investment thesis.
Yep.
So I think it's just because, and it's also just people seem to be okay with the economics around ETH right now. It's kind of trending in the right direction.
Yep.
And then people are it's trending in the right direction, and then you're going to go and change it drastically. It doesn't make sense.
Yep.
It would also price out solo stakers, was the last piece of criticism that I heard on the ETH
all
proposal
those
in particular.
ETH cashback cards and neobanks and all of that, they're all reliant on the good old staking yield. Let's keep rolling. Yes, Sui is our boy Mr. Lighter says in the chat. I did see that. I thought that was interesting. Into the next. So Thread Guy says that crypto OGs were trading against plumbers and wouldn't last in today's era. Alt season, bro. Fabled alt season where every altcoin goes up 20x. This has to happen this way. 2017 ICOs. Some of the best were the best, don't get me wrong, but it's wake up, Unk. Sentin owns 60% of supply. He's dumping on your head top. Every new narrative is controlled. The game has evolved. All right, let's just hear Thread Guy out here. This is gonna be funny, I'm sure.
They were trading
went
against
pretty
plumbers,
viral.
Bro, they were trading against alt season, fabled alt season, bro, where every altcoin goes up 20x and it just has to happen this way. Bro, they were trading against plumbers. They were. And some of the best were the best, don't get me wrong, but alt season, man, it's that is a concept of the past. It doesn't exist. 2017 ICOs, it's Unk, wake up, sent it at 60%, and he's drilling on your head top, and every new narrative is controlled by trend. It's the game has evolved, okay? And the new game is not going to happen on Twitter. I really believe this. The new cycle, if it happens, and I think it's going to happen, I'm starting to believe it's going to happen, it's not going to happen on Twitter, okay? Gone are the days of you have influence just because you've been here for 10 years and you're a funny poster.
Oh my God.
Welcome back, Andy.
I'm so glad to be out of the trenches. Oh my goodness.
They're trying to pull you back in.
I know, they're trying to pull me back in, and then within 2 days of seeing the replies on my tweets from people on FOMO. First of all, I joined FOMO and I got 300 new followers in a day. And I was like, wow, this is crazy. Mike Dudas just crossed from 1.6 to 1.7 mil followers, and he got botted a ton. But insane.
I did not realize Mike Dudas was at 1.5 million.
He was at 180K, and then he got Twitter botted to 1.7 mil, and he couldn't stop it, and he didn't go private. Somebody was just buying him fake followers nonstop. Yeah, it was insane. And so he launched his coin. what does he mean by the next bull cycle will happen on Twitter, Blue Sky instead? I think he might mean that it's probably going to happen on like FOMO or Pump Fund Social.
There's like social trading apps.
Yeah, it's not going to happen on, like, you're not going to get the early alpha from being on X anymore. You're going to get that from being on Pump Fund Social when Dudos buys Pepe Toad and posts on Pump Fund Social but doesn't post on X.
Yeah,
and like honestly,
this is true to Thread Guy's thesis of social trading, and the next influencers are going to be like these financial people that fans are going to copy trade.
Yeah, I got like 700 or 600 followers on FOMO in like a day or like 3 days.
Yeah.
So it's growing. Like, and I can't post on this though. I don't think
there's this is happening all over the place. There's an app that I got the opportunity to angel, and it's a social like sports gambling thing. It's built as a app layer on Callsheet and Polymarket, so it'll route orders to the prediction market, whichever one is going to give you a better price, and they are consistently, I mean like 99.99% of the time, beating like the DraftKings and the traditional sports books. And so they get you a better price on these things, but it also has copy trading built in and social elements. You're just scrolling a feed. You're like, this guy's gotten 7 of his last trades, right? Yeah, I want to follow. Yeah, I'll tail him. Yeah. It's called Tailgate, I think.
Nice. Very cool. Very cool. The social dynamic of this trading world is going to drastically change, which I think is great. Like, I don't know. I think it's cool, guys. You guys should see my performance on FOMO. See if I know what I'm doing. I'm doing all right on some of them. We'll see how the others do.
Well, that's actually a great point, because you've got a lot of grifters and LARPers out here that'll post a Phantom screenshot of $18 million in there, and it's like, wow, look at me, I'm the best trader ever. Well, it's like, all right, well, let's see how you got there. Exactly. Like, let's do some of this more in public rather than just all of a sudden you post a screenshot, no one knows really like what happened, to end up in that place.
Yep, 100% agree.
And I think it'll skeeze out the scammers a little bit, which is something that we love doing here.
Alrighty, guys, let's keep it rolling into the ETH staking news. Before we do, let me tell you about 1inch. You may have heard of this concept called shared liquidity flying around. Products like 1inch Aqua let you approve one wallet balance to back multiple positions at the same time across pairs, ranges, and chains. You're not splitting your tokens, and you're not depositing, but you're not leveraging them either. It's a totally different way to keep your liquidity active in more markets. Check out 1inch.com/aqua.
Fantastic ad read.
So,
by my lovely co-host.
As you say, Rob, a $7 trillion asset manager Fidelity to enable staking and quarterly cash payouts for its spot Ethereum ETF, another giga whale company that would not want the Ethereum issuance rate to go down.
And this is true of all the institutional involvement in this, but then also a lot of DeFi apps and founders weighed in and were fully against this proposal.
Yep. So don't have much here to add, but I think the institutions are going to be bullish on ETH. I think they're going to continue to be bullish on ETH.
I just think that this is going to open up. Like, this is actually what gives ETH monetary premium, which I think is why people were so against this. So Fidelity has almost $1 billion in Fidelity ETH, like their ETF. And now they're going to turn on staking. Right. And so people are going to look at this and they're not really going to care, where does the staking yield come from? Oh, well, it comes from this thing of proof of stake. And, this thing gets emitted because it's got proof of stake validators. And then you're actually securing the network because of something called economic security. And that's what gives They don't care, dude. They're going to see 4.5%. They're going to see rates at 2.5%, 3%. They're going to say, I want more percent on my money. I'm going to buy this ETF.
And just like all of us have gotten burned by staking in the past on some random garbage POS chain, when you get this yield, it makes you hold the thing longer. So like the mom and pop, the advisors, the ETF holders, they're gonna want to hold these things because like even if they think it's overextended, they're gonna be like, oh, I'm getting 4%. Might as well just hang on to it. You know what I mean? So it's kind of this weird thing where you get the yield and it makes you want to hold the asset a bit longer than maybe you should. So, okay. Well, let's keep it scrolling over here into the next piece. I'm gonna get my screen share up. I got a couple of things that I'd like to go over as well.
I think we've got plenty of time here before our first guest. We got about 20 minutes before Guillaume is
Yeah,
gonna join
man.
us. I hope I'm pronouncing that correctly.
Yeah.
But, we'll get a little bit more into the Uniswap Aerodrome Dex Wars.
Yes.
If you want to call it that. I'm not sure what else to call it. So
Yes.
we've got, while Andy pulls up his screen, I think we've got maybe one or two more tweets that are ready. The cold card exploit happened while you were gone, Andy.
Did it?
Wintermute is getting into AI equities.
Are they?
Leopold. I'm curious. Did you hear about you heard about the whole Leopold situation? That, I mean, was like a massive news headline for at least a day.
Yeah.
Got liquidated by Kenny G.
Yeah.
You know, you're
Good old,
I hear you're friends with the friends of the family.
Yeah. Yeah.
So what's your reaction to hearing Ken Griffin liquidated
It was pretty. It was
the young stud?
It was pretty. Yeah, let's just go ahead and flip through Leo there on to Hyperliquid. It was pretty funny, man. You see the news and Leopold's getting married, and he says it's the best day of his life, and you just, like the meme of maybe it's just as simple as Bogdanoff of like he sold Pump It or something. It was just like that thing of just like where the sharks they can feel the blood in the water and they just pounce.
They run stops.
They ran and there was some news that maybe Ken Griffin had said some very bearish things about the AI trade in the days before.
Well, he
sending
said that
the markets down.
It was like the day after the Fed was supposed to raise rates, and Ken Griffin put out the rumor that said it was more likely to raise rates.
Yeah, exactly. That's
so the
what it
stock
was.
sold off. Next day, they held the rate steady. He had it already acquired, and then he was right there for the bounce.
So I think this is why Hype's like having a little bounce today. The information reports that Hyperliquid looking for its path to U.S. markets and its perps markets. The regulators obviously have recently allowed regulated perps off chain with Kalshi and others. And now, there's kind of a race right now between different perps platforms to be the one that is publicly available in the U.S. And I think if Hyperliquid can get there, they're going to have such a liquidity moat. And so what they've done is they've actually implemented a new tech thing that basically allows for permissioned HIP3 markets. So in order to access the HIP3 market, you need to be some sort of KYC'd, AML'd, whatever it is, right? And so that's happened. And yeah, I mean, that is a really cool way. If that's what becomes the way that they are coming to the US, I think that's bullish. I think it's a great start. And I think Lighter's right on their ass. I mean, I think Lighter, obviously Delaware C Corp, based in Miami. Vlad's on the Innovation Advisory Council,
which is meeting the CFTC on August 20th.
What do you mean meeting them?
CFTC's been on an absolute tear.
Really?
Yeah, and so most recently, there was a lawsuit around between Kalshi and the state of New York regulators, and
there's a probe
CFTC
right now.
Said to Kalshi, ignore New York and stay open for business. That was massive to have a federal regulator overrule a state regulator. In addition to the CFTC doing this, Mr. Chair of the CFTC, it's not Mike Seelig. He is the chair of the SEC, but Mike Seelig, chair of the CFTC, also said that there is going to be a meeting with the Innovation Council. So we're preparing for some things to be coming out of that.
Yeah.
On August 20th, the CFTC will convene a meeting of some of America's greatest innovators, builders, thinkers, and entrepreneurs in Washington, D.C. for a series of conversations on the future of our financial markets. Mark your calendars for the inaugural Innovation Advisory Committee meeting on Wednesday, August 20th. So we will be covering that next week for sure. Because it sounds like it's going to be like a little conference of sorts for the CFTC and all of the members of the Innovation Council.
Very cool.
And so I think, Hyperliquid's obviously part of that. Lighter's part of that. Vlad is part of that.
Yes.
I think Sergey from Chainlink is part of that, if I am calling that out correctly. So there's several things, and the CFTC is just, I mean, and the SEC, like Clarity Act got stalled. CFTC comes out and just guns blazing. And the SEC is doing the same. I don't think we have anything on our docket around some of the regulation, but like the innovation exemption around the SEC seems like the CFTC and the SEC are up to something, and it's going to happen in the next couple of weeks.
Yeah, man. Very cool. Very cool. I think this reg crypto would be huge if Clarity does not get through. That's what we'd be hoping for, right?
Yeah, let's see if we can find. Yeah, tell us what we have on the screen here.
Yeah, so this is Robinhood Chain, and their metrics, and they are just absolutely cracking. I mean, throughput on the chain has been just up only, which means that there's a ton of transactions happening. Transaction count has gone absolutely parabolic the last 3 days. I mean, parabolic growth now starting. Active addresses, which is not a huge metric. On August 10th, Robinhood Chain had 273,000 active addresses. Today, on August 12th, they're at 1.9 million active addresses, a 7 to 8x increase in active addresses. Maybe more like a 6 to 7x, but insane. Stablecoin supply up only. TVL crossed 1 billion today. Economics making 100K a day. Rent paid to L1. They made $117,000 today, and they paid Ethereum $1.57. I'm kidding. They made 117 grand. They paid Ethereum 1.5K. But still, their on-chain profit 116 grand. That is a 99% margin business here, ladies and gentlemen. App revenue on a day-by-day basis is cracking over $2 million. Transaction costs since mid-July have just nuked. This is the most successful Ethereum. Robinhood Chain is the most successful Ethereum L2 launch we have ever seen in the history of Ethereum. There's just no debating it. This is the most bullish thing I have seen for Ethereum in a long time. I mean, there's no way around it. Oh, there's not enough rent. It doesn't really benefit ETH. I don't care. Robinhood Chain is single-handedly making me way more bullish on Ethereum and many others. This thing is a monster. Robinhood Chain is a monster. Dude, the guy that started Pudgy Penguins, Cole, he minted out a 44,000 NFT collection for $1 million profit on Robinhood Chain yesterday. We got guys in the chat saying to buy Cashcat NFTs. Cashcat NFTs, OpenSea. Cashcats. Floor price 0.26. Total volume. This is a decent amount of volume for a small little collection. 1.4 million.
NFTs are back, or are you telling me bullish Robinhood?
I'm telling you, these guys are swapping meme coins every minute right now on OpenSea on Robinhood Chain. When have you seen this?
Even the OpenSea founder crashed out and went to AI.
This is up only for Cashcat NFTs. I mean, I literally had a guy in the chat when I was interviewing Johan in the studio, and he was like, yo, ask Johan if he has any Cashcat NFTs. Do you know when that was? That was before I went to Patagonia that week. So that was right here. The things have 10x'd since my interview with Johan.
Wow.
10x'd. Did I buy any? Of course not. I didn't buy any. Well, that's NFTs in the year 2026. Something's happening on Robinhood Chain.
Look, Robinhood's a killer business. Hood could do some damage in this upcoming market. I think NFTs are, kind of fallen by the wayside. But when you have an ecosystem as strong as Robinhood, I mean, these guys could launch Dentacoin on Robinhood. It'd probably do well.
Apparently this pawns thing is the big
so much motion.
Apparently this pawns thing is the big thing to pay attention to, token wise.
Well, I saw it was up about 30% the other day.
Yeah.
It's up 20% today. Wow, this thing's been.
ripping, right?
Oh yeah.
And all that is a launch pad for Robinhood Chain.
Yeah, I mean, I don't know if you saw the Dudos tweet, but we've moved on from, meme coins are bad, and we've moved on to my launchpad is holier than thou's.
Yeah.
So, I mean, launchpad business, just like perps exchanges, like if you want to bet on the house, like bet on the venue, launchpads and exchanges. Like those are the money printers.
It's like you just buy the casino.
Yeah. Yeah. Those are the money printers. I mean, that's where all of it comes from. Why are you going to speculate on a meme coin, runner? Why not buy the thing that helps you manufacture meme coins? People are going to want to speculate on everything that comes out of these things. They're going to want to speculate on perps.
Yep.
They're going to want to speculate on meme coins, especially on a chain like Robinhood Chain.
Yep.
Might as well buy the infrastructure, buy the venue, buy the casino.
So here's 1inch
pumping out coins.
And his good example of 1inch being a casino provider, if you will, not necessarily casino provider, but they allow you to swap on Robinhood Chain, and here they are on their new Aqua product, and it's absolutely cooking. I mean, it's absolutely cooking. I mean, they've got tons of open positions, good bit of LPs, 31 million share liquidity, and guess where about half of their pullable share is coming from, or their LPs are in, or guess what that orange is? It's Robinhood Chain. It's Robinhood Chain, and it's Ethereum mainnet.
Those are the two places for economic activity on chain.
Yeah, Base is not in here, although I think Base is a sleeper. Base is not in here, and it's just ETH and Robinhood Chain. ETH, Robinhood.
It kind of seems like what happens on Base stays on Base, in the sense that like they have tons of trading volume. I think they do something like $300 million a day, right? So that's like a lot of volume, a lot of activity, but it doesn't seem, at least when we look at some of these cross-chain providers, it doesn't seem like there's a lot of flows in and out of Base. Like what's there is getting traded there, gets turned over a lot, but there's not a lot of flows in and out.
Okay, so Robinhood Chain metrics here, right? Total Dice TVL 1 bill, stablecoin supply 600 mil. Stablecoin supply on Base 5 billion. Yeah. Dramatically more.
On Base, right?
Total value secured almost 12 billion.
Yeah.
Massively more here, as you can see. Huge. Revenue, though, only 54K in the last couple of days. Revenue for Robinhood Chain, quite a bit higher. It's interesting. Throughput, active addresses, all significantly lower. Just interesting. Transaction count going parabolic. Active addresses going parabolic on Robinhood Chain. On Base, pretty steady. So yeah, I don't know, man. I'm Spat says uni. Yeah, I mean, we'll see what happens there. I think 1inch is doing a really good job, and it's an interesting job here, Rob, with their Aqua launch. Obviously, partner of the show, friends of the show. They had a successful launch. Can definitely clip this and show some of the results. And so, yeah, I mean, Robinhood Chain is just coming out of nowhere and just dominating. I mean, absolutely dominating.
Can you think of any ecosystems aside from ETH mainnet, Robinhood Base, and Solana that have any kind of motion right now?
Hyperliquid, of course. And
yeah,
Lighter.
I don't think of them as much as an ecosystem, but yeah, of course.
So Lighter comes out and says that their Robinhood points is going to launch tomorrow, and look what the chart did. They announced it right here.
It's great timing.
I mean, this thing's ready to go, man. Look at this thing. This thing looks beautiful.
What is this? Lighter?
Lighter on the daily. I mean, this thing looks absolutely gorgeous. Ready to absolutely just melt some faces to $3.
Oh, boy, I missed a little bit. I missed your technical analysis just a little bit.
Am
not
I
a
wrong?
lot, just a little bit.
Am I wrong? Like, does this thing not look fantastic?
It looks, dude, there's no momentum in this asset class. There's no sort of, like you think of flows. There's no flows. Like Lighter's pumping because it made an announcement as it was dipping that they're gonna do this partnership with Robinhood. That's why it's going up. Like you don't see that in the chart. Like you don't look at it and see that, by looking at it. You look at it because it's fundamentally got this positioning in the market. It's got this revenue. People are projecting that's going to generate more revenue.
No, it just looks good, Rob.
Guys,
you have to combine both. You have to do fundamentals and technicals.
Dude, if there is momentum, then yes, I can understand, narratives take off, right? If perps trading, for example, in the US gets approved by the CFTC or regulators or Clarity Act,
yes.
There's going to be a re-rating in which Lighter and Hyperliquid teleport upwards, and the multiple of how much money they're bringing in revenue to their market cap is going to expand. But the question becomes, we don't know how much it's going to expand, right? Because it's sort of got narrative price discovery, if you will, or multiple price discovery. But that's not that's not happening.
No.
You don't just see that in the chart. And so if
I'll see you
there's some sort of catalyst that creates momentum, then sure, yeah, pay attention. It looks like it's going to stall out here. These are the levels to watch. But if there's no momentum and no there's nothing to pay attention to in terms of flows. There's nothing to just look at and identify.
I'll see you at $3 per lit. All right.
I'll see you at $5.
See you at 10. I'll one up you there, bud. Let's get into daily equity powered by our friends at Denari. Let's get into it here before Rob blows the lid off.
Edward in the chat said 30 by 2030. I'll see you at 30. I'll see you at 50.
ETH OG has been buying Lighter with a $50 million wallet, buying clips every day. I know he has. That's Robbie. Robbie didn't tell you about his side wallet? Come on now, bud. Mr. Lighter OG.
Hit up my FOMO wallet.
You're not a real Mr. Lighter OG if you don't know that that's Mr. Clay's over here in the building.
Oh my God,
all right, let's get into the
last names. You're still Andy C in the subtitle.
Denari here. We'll get this in there.
What do you see in the equities asset class? What does it look like?
It looks ready to go. I mean, I'll tell you what, guys, stocks get new rails after Denari's launch of tokenized spot S&P 500 assets into the United States of America. BlackRock Larry Fink's calling tokenization the next generation of markets, $5 trillion by 2030. Capital markets have done this once before. Used to be a piece of paper. Now it's on brokerage account. Next thing is on chain. Denari is totally right. One of the leaders in this market and has done a great job of being able to bring this now, the first of its kind, to the U.S. investors in a regulated fashion. Let's hear what Larry has to say here. I'm bullish on Larry. Guys ready to go. I mean, this is it. I'm going to take my Denari D share and I'm going to put it into Aave and borrow against it. And I'm going to do it as a U.S. citizen in the United States of America.
Andy, did you know that Denari D shares span all 500 companies in the S&P 500?
Yes.
They've tokenized every single company. You can buy them individually.
Whatever you want to buy.
You can buy the index.
Yes. And there is a bit of a limit right now, I believe, on the purchasing power.
I think it's like $5,000 a day or $1,000 a day or something like that.
I think it's $5K.
That might just be based on which funding source you use. And so, I mean, I found that incredible because, I mean, think back to, some of the conversations that we've had as some of these technological spaces open up, some of these opportunities open up. It's always extensibility. It's like, okay, it's a multi-chain world. Well, how many chains does your interop protocol reach? How are you able to extend across all of the chains? How are you able to list all of the assets, right? And Denari, I mean, is able to do this. They don't go, the native issuance model and talk to every single company, right? And get them to tokenize their shares natively. They also don't go in the funky monkey SPV wrapper nonsense. Right? But every D share is a real share. It maintains all the shareholder rights. So yes, this segment is powered by Denari, but I mean, look, even if it wasn't powered by Denari, I feel like we would be talking about them as a power player in the tokenized equity space.
Yeah, let's hear what Gabe has to say here at the RWA Summit with regards to kind of how he's thinking about what is happening when you tokenize these equities. Okay, let's just scroll down here and have a look here at the graphic here. Programmability adds what the old infrastructure could not: instant settlement, automated corporate actions, access from anywhere. These shares are now live in 85 countries, including the US. First time ever. These will be accessible on Ethereum, mainnet, other chains, and more. This has been the Daily Equity. What's next for tokenized capital markets? That is Gabe. He is the co-founder of Denari and has been on the show quite a few times. And I mean, look, this is a big launch for them. We're excited about what's happening. And I am going to make a note now that I'm back from Patagonia to go ahead and, make a Denari account and participate in minting my first stocks on chain.
And it uses the same mechanism that we talked about on Robinhood, this just-in-time tokenization or tokenization on-demand mechanism, where a user submits an order. Basically, the important thing to realize is that there's not a massive capital investment that needs to be done in order to bring inventory on-chain.
Correct.
Right? If so, it would be difficult to, the extensibility would be limited by the kind of capital that is raised and invested into this asset class. And if you tokenize, you don't know what to tokenize, but that's not the case. And so as orders come in, you would tokenize the equities on demand, which I think is just the most capital efficient approach to tokenization that we've seen in the equities asset class. Big Denari hat, big Denari guy here.
I approve this message. U.S. stocks available 24/7 in the United States of America, powered by Denari. You guys will see me on the show this week. I will be having a Denari account. It will be epic. It will be time to go. We're going to get it fired up.
Gabe also talked about, I mean, there were several things that, he brought to our attention about what is coming next, but he couldn't talk a lot about.
Oh, yeah.
And it's all with regards to the do more with your stocks like slogan, like that principle. Once you have the asset class proliferate across several chains, another thing Gabe mentioned that I found very compelling about this way of doing tokenization for equities is that you can deliver, because it's effectively an intent system. You submit the order, there's a broker dealer or a market maker, there's someone on the back end, and he says part of why it took so long for them to list in the US is because they built out this compliant and regulated system where, depending on whether it is market hours or not, and whether it's the weekend or not, they submit the order to a different liquidity provider, a different broker that is ultimately going to deliver the shares. If it's during market hours, there's a set of market makers that can comply. If not, there's another set of off market hours market makers. Because they submit this, and then it does take not a lot of time, but some time to end up delivering the equity from the market makers, they can settle that trade on whatever chain you choose. If you want your tokenized equities delivered on Base, they can deliver it on Base. If you want to tokenize them and deliver them on Ethereum mainnet, do that. If you want to deliver them on Solana, do that. And so
I want them on Hyperliquid, baby. I got SpaceXD on Hyperliquid. Xstocks coming in. EQX Labs coming in. It's going to be a battle for Hyperliquid spot equities trading. Robert Clay, just great to have you back. Great to be back. I'm wearing the Denari hat.
Great to have you back. I've been here, buddy.
Let's take a quick break before we get our first guest at the show up talking Uni V4, LPs, revenue metas, and more. Coins are pumping. Big week ahead. Let's get Bitcoin back to 67K and let's get the party started. Let's get Guillaume up next. Take a quick break here.
what's going on, guys? This is Etan with the Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
Dangerous.
Already good time in Vegas.
The boys are in Vegas. That's what I missed here, guys. Chad, I missed the Vegas trip. Apparently it looked pretty epic. Tom, please be safe out there. People be crazy in the streets nowadays. Yes, guys, we will have some. I just looked at so we did a kind of like a rehearsal week of a ton on the streets. You know what? After we chat with Guillaume about Uniswap, V4, etc., we'll get a ton up here in the studio. We'll get a quick.
Oh, perfect.
We'll get a little reminder of what's going on behind the scenes with the streets content. We've got Guillaume here, Guillaume Lambert, founder of Panoptic. We're talking V4. We're talking DEX fees. We're talking liquidity shifts, Robinhood Chain, and more. Why don't we bring him up? Let's get Guillaume up on stage. Get the show started. Guillaume, welcome to the show. Good to have you, man.
Hey, I'm glad to be here.
Yeah, man. Busy times.
Guillaume, maybe you could just start by telling us a little bit about Panoptic. We have here that it's a DeFi protocol building prime brokerage and perpetual options on top of Uniswap. Could you just tell us a little bit more about what that means? What is Panoptic?
Yeah, exactly. So we're an options protocol on Ethereum mainnet. We're able to make options work on mainnet because we're rethinking what an option is. If you think about perps and futures is a TradFi way of doing this, but perps got rid of the tenor. It's much simpler. Every degen can trade them. And if you think about options, you have a much bigger problem. You can still think in terms of expiries and strikes. If you have the chance to open the options tab on your brokerage firm, it's an Excel spreadsheet worth of numbers, and it's quite hard to parse. And if you try to do this on chain, it's quite difficult. You have to have a transaction for each one of those little kind of Excel spreadsheet cells. And then many people have tried it, and then you have to rethink options, make them easier to trade on chain, but also change how they actually behave. So in our case, we make them perpetual, again, similar to perps. We make them where there's much less liquidity fragmentation. All the options that you trade come from the same pool. And also, kind of that at the deeper level, we're built into Uniswap, V3 or V4. So if there's a pair that exists, whether it's a meme coin, stablecoin, or a tokenized stocks, we can actually build on top an options market. And you have buying and selling options, puts or calls, what have you, or even combine many of them to create spreads, but all within the execution level that is on Uniswap. And any university can work with that. So we've been live with V2 over the past 2 months. We have vaults. We have many ways to make it easier for people to trade. But at the same time, we also have kind of an advanced platform for anyone that knows about quants, knows about the Greeks. They can also trade on Panoptic.
Yeah, man. Cool. And so from your kind of math and quant and on-chain trading perspective, what is your take on the proliferation of Uniswap V4 on Robinhood Chain and just generally this fee switch? Maybe you could just unpack a bit how you think about DEXs as revenue generating companies and the ways in which you see them kind of play out for rewarding LPs, token holders, and also trying to kind of provide the best trading experience. You've kind of got this like trifecta here of really good, deep liquidity, good trading experience with low fees, rewarding LPs for impermanent loss and trying to create a really healthy LP ecosystem, and then also having a revenue generating machine that rewards token holders and does buybacks or has some sort of function in that realm. It's kind of like this like triangle. How do you think about that triangle to start? And maybe we can get into more about Uniswap and the fee switch.
Yeah, exactly. And again, with Uniswap, that's on Robinhood, as I mentioned. That means you can trade any assets, and whether it's a tokenized stocks or a meme coin, a Uniswap pool can serve this quite well. And when you think about this, there's always someone in the background taking some risk. And then the LPs, though, that provide liquidity, they put their tokens at risk. And they are the ones that are providing a service, and they get paid whatever the swap or the swappers pay them in terms of fees. So for a very volatile pair, there's lots of trading. You can use a higher fee tier and get 1% per trade. Or if it's a very, very less volatile or boring pair, you can be stablecoin. But there's always someone in the background that takes some risks. And that is, I would say, the main user of an AMM. Swappers, they can still go OTC, RFQ, they can swap with their friends. And as long as people agree on the price, the trades can happen. But on the LP side, you are providing this service that is continuous, perpetual, never stops. And if you do it through DEXs, this is how you generate revenues, and this is how you get rewarded for that risk. And you can try to attract swappers. They could be quite mercenaries. You can try to attract LPs, and these will maybe have a higher sticking power. But this is when in DeFi Summer, people try to attract them with DeFi Summer coins, YAM, of those. Just boosting their revenues means that they can now do this with a little bit less risk on their balance sheet. They have an extra revenue source that's not just swappers, but also the tokens. And in terms of Uniswap, they had Uni Incentive. This is kind of pushing the needle one way. How can we attract more activity by helping LPs deal with the risk and impermanent loss they can face? And with the fee switch, you kind of put the needle the other way. Now you decrease their revenues. Now it can go towards buying back the token. It can have a different use case. But the risk taker in this ecosystem now will have a much harder time because they can see their revenue cut by 5, 10, 25% in some pools. So that whole, as you said, trifecta, you have who uses it is swappers, but LPs are the main kind of carrier of whether liquidity exists. And unless you are careful with how you reward them or maybe take revenues away from them, this is how it can get more difficult for LPs. And back in the few weeks ago, even this is when I was a bit more vocal about this. I'm an LP myself. The protocol I'm building, Panoptic, also uses LP positions as the way to do options, and it's a cut to the revenues of our users, of myself. And yes, maybe the token can be part of that equation, but if the protocol doesn't hold tokens, they don't necessarily benefit from that. So this is kind of the two sides, how you reward and benefit the users, which are the LPs in that case for AMMs.
So I just want to make sure that we understand correctly and our audience has the complete picture here. So Panoptic and yourself is providing liquidity to this ecosystem, in particular to Uniswap. And so you're saying that after Uniswap turned on the fee switch, which I believe was on July 27th, 2 weeks ago or so, after July 27th, after they turned on the fee switch, you saw your LP rewards reduced. Is that correct?
Yeah, that is correct. And it's actually how it was designed to be. With V3 or V4, you have the swappers that pays a fee, and a fraction of this gets redirected, and it goes to a different smart contract. And it doesn't all flow to the LPs on the other side.
And do you have some numbers around this? Like, do you know how much you were retaining in LP fees, as you were providing liquidity, and Panoptic was providing liquidity before and then after the fee switch?
Yeah, so the raw cut, if you want, depends on the specific pool or market. But again, go from 15 to 25% of the fee paid gets redirected. And some days you have a lot of trading, some days you have a lot of moves. So it's hard to do a one-to-one a month ago to today, for instance, but it is definitely something that you can compare by just saying, hey, X amount of volume, less fees would be redirected to the LPs.
Wow. To the tune of 15 to 25%, because my understanding of the Uniswap fee switch is that I think I saw it's 5 basis points, but you're saying 5 basis points gets amplified into 15 to 25% less rewards for the liquidity providers. How do you go from 5 basis points to 15 or 25%?
Yeah, so it's 5 basis point out of 30. So the 30 basis point pool where every swapper pays 30%.
I see.
30 basis points.
I see. So if I'm making a trade, let's say from USDC to ETH or ETH to, wrap Bitcoin or something like that, I'm typically paying 30 basis points on that trade. And so you go from 30 to 35 basis points, which is an increase of 15%.
Yes, exactly. And in V4, you go from 30 to 35. On V3, which was turned on, I guess, last December, you still pay 30 basis points, but then there's 5 that gets redirected away from the LP. So that 15% is definitely that. And then the 5 basis point pool is 1 or 1.75 or 1.5. So there is a scale there. And this is when you get to 25%.
And so when you say this was by design, I mean, Uniswap obviously wants to make money, right? They have a lot of activity and volume that's flowing through their protocol. When you say it's by design, did they know how much this was going to affect LPs? Do you think it caught them by surprise? Or do you think they knew, they turned it on intentionally, and they're okay with their LPs getting 25% less rewards?
So yeah, I don't know exactly how the process went, but then when I meant it's by design is back because the smart contracts that were written in 2021 or 2024 all had this logic that was just turned off, and it was quite easy to extrapolate. Okay, if this is turned on, this is what's going to happen, and the net impact was debated, tested again, and V3 was turned on last December, and the V4, which now means all pools are affected, also have been turned on this month. And I would say again, this was known ahead of time. This was going to happen, and this was not something that took anyone by surprise because it was in the code. What is less obvious is the impact and how you kind of mitigate some of this. And we do have ways to, as an LP, I had to shift my strategies. As a protocol building on Uniswap, we also have to shift our strategy. So it's not necessarily preventing anything from happening. It's just now it shifts. Okay, we have to deal with this extra layer that we need to worry about.
How have you shifted, or how will you shift your strategy? Are there things that you can tweak, levers that you can pull? How do you anticipate shifting the strategy given this fee switch?
Yeah, and again, I'm a physicist by training, and I do a lot of the math and analysis myself. So I need some raw numbers to actually back what I'm saying. Yeah. And when you are dealing with an LP position, a market, any asset, the way that I rationalize whether I LP in this asset or not is that I look at the volatility. A very volatile pool, like a meme coin, will have a lot of trading, which is purely organic, degens going up and down, trading the pool, the asset. This will create a lot of healthy flow if you think about this. And this is one that I'm more comfortable trading. If there is again, I don't do meme coins that much, but this is one way to generate healthy revenues because there is a lot of natural demand, and you actually made a lot of money before. Now you made a bit less, but still quite positive. On the other end of the spectrum, I would say that low volatility pairs, stablecoin, ETH, stake ETH, those that don't move much, but then it's also purely organic. There's no market maker arbing the price of stake ETH to ETH because it's there's no arb to be there you can redeem. So it's only people that do want to trade it that will be exposed, and this is also creating a much healthier return profile. Those which are more difficult is the ETH USDC, Bitcoin USDC, those which follow the price on Binance, for instance, and the bulk of the trading and the price discovery happens off chain. And what you see when you are on chain is just arbitrage low, like just arbitrage flow, low quality flow that will just make you barely breaking even. And with the fee switches in when you have to scale back. So when I need to adjust, I just say which pool do I go to that will try to help me maximize that healthy flow that comes into that pool.
I see. Okay, so the one-sided pairs, if you will, are the ones where this fee switch has actually turned it from a profitable strategy into a unprofitable strategy. And then there's other pairs, for instance, stable pairs and meme coin pairs where there's a lot of retail flow or a lot of stable flow. And those I'm hearing are still profitable, but not as profitable as before the fee switch.
Yes, that's correct. And the it's all market dependent. If everyone leaves and removes liquidity, there's a bit more for those that are sticking behind. But at some point, you hit into a wall where there's not enough liquidity to back trading. So there is kind of an equilibrium that will happen.
Do you talk to other liquidity providers? I'd assume that like you guys are in, you know, a group chat or whatnot. You hang out on the weekends. You go to the boat or the beach or whatnot. Like,
go to Vegas.
Go to Vegas. Yeah, you heard us talking about Vegas before you joined. Is this something that all the LPs are facing? Like everyone is now sort of deliberating about how to shift or adjust the strategy in the wake of this 5 basis point increase in the fee switch?
Yes, exactly. And there's no one group chat, but then I've been in touch with many of them through kind of my years as a LP researcher. And a lot of this is also, there's some inertia. So you have this enterprise going, you may be providing liquidity to a dozen pools, you shift liquidity back and forth. So there are ways that you can adjust. And then you can still maybe make less on one pool and then shift to a different one. Or you have a contract, someone pays you, so you don't necessarily care to make like a razor thin margin. You actually have a revenue source that's outside of that. And that is something that people say, yeah, I don't mind staying in the V3 pool if it has some fees. And this is what we've seen over the past 6 months, even like the liquidity has shifted a bit, but nothing major. But then the end state is at some point, if there's no real reason to keep going, people will just kind of stop doing it, and you'll see less and less liquidity. And this is my like maybe the worst case scenario is that you have this withdrawal of liquidity that is progressive, that is just apathy forming over time, and say, yeah, okay, I didn't make money over the past 3 months, let's close shop. And this is when you kind of lose the richness of the ecosystem as a result.
Yeah, right. No, of course. I mean, part of why, you know, these DEX AMMs have thrived up until this point is because it's a permissionless ecosystem. Anyone come in, it's totally capitalistic. It's, you know, just the market forces. And if, you know, a tax comes into the market, it forces, you know, marginally profitable participants out of the market. Yeah. That's just,
and maybe I can ask you, Rob, as well, or even Andy, like have you LP'd in the past yourself? DeFi Summer?
Yeah, DeFi Summer. It's been a while. I mean, we kind of jump around a little bit, and there's a lot of professional liquidity providers now. But in the past, Uniswap V2, yeah, we were liquidity providers.
And this was the most fun that most people had. Like, you can try to optimize lending pool without tugging down any protocol. But this was generally, you felt like you made money. You had some activity. Sometimes you lost, but then most of the time, whether it's incentives or real fees, this was like one of the best things to do with your ETH or your coin or whatever airdrop you got. And now it's like a bit dying. And again, you can think about different use cases, and this is me maybe plugging the Panoptic protocol a little bit, but you can borrow against your LP position, for instance, or you can LP on leverage. You can have different ways to kind of enhance the return profile. Or you can, again, we're an options protocol. You can buy puts or you can buy protection to your LP positions and kind of manage impermanent loss in a way that's not just let's wait and see, but rather you have this options or you have a way to mitigate risk. And this is where you can have a lot more diversity of strategies by not just being an LP and kind of hoping for the price to stay in range, but rather you have this maybe more fun ecosystem that we have. You have more opportunities to trade on top of these positions.
Man, DeFi Summer, those were the days. Those were the days, man. Do you have strategies that run on multiple chains? Do do you have strategies that run on multiple chains, or are you predominantly executing these liquidity providing strategies on ETH mainnet?
I'm personally only on ETH mainnet. Gas in a way is cheap, quite cheap compared to, again, DeFi Summer. I don't know if you had $50 per trade in terms of gas fees, but I've had many of those. Now it's gone down quite a lot. And I'd say that again, the same way that you LP'd in the random airdrops you got, you can do the same thing with now RWAs or tokenized stocks. And there's a lot of activity on mainnet, a lot of activity on Robinhood, a lot of activity on Base, presumably. So you can have, like, you seek the assets as opposed to choosing a chain. This is what I'd say that most people nowadays are doing. You want to trade specific asset, you go on the chain where it's traded. So for now, it's mostly mainnet, but then, yeah, there's definitely ways to expand to different chains.
Very cool. Guillaume, I think just my last question here, as we've talked about, profitability for liquidity providers has dropped as a result of this fee switch. Do you think Uniswap is going to listen to the community of liquidity providers and maybe turn off or decrease the fee switch?
I don't know. This is a DAO that voted, and millions of tokens voted in one direction. I personally don't hold Uni tokens, but I was receiving delegation and vote, and then I voted against and made my point. If we want to turn it off or back, it's not going to be Hayden Adams, again, that Uniswap that will decide. It's going to be the DAO at the same time. So yeah, I'm not going to be, and to some extent, I might be wrong in terms of how it's going to unfold, where people can adjust and make it very profitable in the long run. But yeah, I personally, again, as I mentioned, I'm shifting my own strategies. Again, the strategy that we implement in Panoptic is mostly also for me as an LP. How do I make money now? And then we can actually tap into a different source of diversification. But I would say that it might be quite likely it's going to be on forever.
How close was the vote, just out of curiosity?
45 million to 1 million. And part of it came...
You were the 1 million.
Me, and again, shout out to Gamma Strategies, another protocol that is also in the DeFi ecosystem, also building on top of Uniswap. All the LPs were kind of against it. Those that voted for maybe had less skin in the game. But at the end of the day, I was, again, I had to do it. It's not because I did not like the revenue source or what they were going to do with it. It's just, I don't think it's punishing, or at least affecting the wrong side, LPs, which are the backbone of Uniswap.
Well, this is fascinating. We're just continuing to keep an eye on this as the story develops because, yeah, like you said, I mean, we've talked to some liquidity providers. We've seen some of the discourse, between players in the DEX AMM space, and it's fascinating to watch. We at this show, we just love financial experimentation in real time, and to see this play out on both sides has been fascinating to watch. So we're gonna continue to monitor this story. Guillaume, would love to have you on again sometime soon. Maybe talking about how yield strategies adapt as these things go on, as new venues launch, and some of these things take place. I'd love to have you on again soon. This was fantastic. Thanks so much for coming on and spending some time here with us.
Of course, thanks for inviting me. Anytime too. I'll be glad to be on.
Absolutely. We'll be in touch. Thanks so much, Guillaume. Have a good rest of your evening. We'll catch you later.
Thanks.
All right, guys, that wraps us up. Fantastic show. It's great to have Andy back on. And
got a little bit of
all good on the return.
A bit of a heat wave there on the
do we have you?
Rollup there.
He's talking.
Bit of a heat wave here in the Rollup headquarters in New York City. I needed to take a breather for 15 minutes and go from 85 degrees to 81 here. So we're doing what we can. Great to be back, man. Great to be back. It's been a good show. We got a lot of work to do. We got a lot of conferences ahead. Some more summer travel
conference
ahead.
Circuit. We'll be in New York in September. We'll be in Singapore. Well, first we'll be in maybe Miami for Cybus. I don't know if you caught the speaker lineup for that, but loaded. Bank of New York Mellon, Citibank.
All the bankers, huh?
Deutsche Bank.
All the big bankers getting into the crypto, huh?
Yeah, their slogan says, I found it interesting to see those names associated with this slogan, digital finance.
Yeah.
That's what they're calling it these days. The
That's what
bankers,
the bankers are
they're calling
it.
it digital finance
With some AI in there, maybe?
for AI-driven economies.
There you go.
Digital finance, and yeah, the speaker lineup's pretty nuts.
Here we go. I'm bullish. I'm down to hit it up.
Yeah, CBDC, digital assets, all kinds of fun stuff. So maybe catch us there. Then Singapore, then back to New York, then maybe London, Mumbai.
Whoa. Don't know if I'm doing that one.
Yeah, I don't know about that one.
Guys,
but
it's been a great show. I am glad
see.
to be back. I'm glad to be
Good
back.
to have you back.
It's going to be a fun rest of the week.
Absolutely.
Every week that goes on, as I was telling you before I guys left, it was like 4 months until we are going to have fun times again. Then it was 3. Then I went on like a 2.5 week break from reality, and now it's less than 2. So at this point, we are less than 2 months away from the potential bottom, if not already in. So at this point, it's just about pushing through. It's just about having some willpower. It's about sticking with the roll up day in and day out. It's about being here. It's about being in the chat. It's about being active. It's about buying your positions. It's about staying in the mental game. It's about not signing off. If you're in the chat right now, you're dropping a W, you're dropping a like, you're clicking subscribe because you're staying in the game. You're going to continue to listen to Rob's rants. You're going to hear me go there, come back from here, and be everywhere and still outperform the market. That is what we're going to do. We're just going to hold the line. We're going to accumulate units and units and units of our favorite coins right now, and we're going to hold them for long-term capital gains. We're going to make some swing trades along the way, some nice little short-term cap gainies. We're going to hit some nice little narrative taints, but it's going to be our big kahunas that we're accumulating right now throughout this year that are going to carry the flagpole throughout 2027, 2028. And that's all we're going to do here at the Rollup. I'm not here to give you the next meme coin. I'm not here to tell you you're going to hit 1,000x. I'm trying to hit a nice 3, 5, 7x on, 5, 6, 7 figs. Go from there. That's all we're trying to do here. Next couple years, we're going to win. We're going to be millionaires. You're going to be a millionaire. I promise you. If Robbie Clay just doesn't make you a millionaire, you just give me a call. All right? If you're watching and you're still watching this show, couple years and you're not a millionaire, just give me a call. I'll have a talk with Mr. Clages here for you. That's all I got for you guys. Drop a W in the chat, man. What a stream. Great to be back.
If you guys have any complaints about the roll up or any financial advice questions, you just call up my friend Mr. Stoker, and he's gonna give you refunds. If you're looking for a roll up refund, you just call up yeah,
Mr. Stoker. Just go bother him a little bit. That'll be good for guys. Where we will be tomorrow. Rain or shine, green or red, freaking war or peace. We're gonna be here. We're gonna be live. We're gonna rip it. We're gonna have fun. We're gonna grip it and rip it. We got Soho House Fridays for the team. Someone needs sleep. Nah, just these eyes are really bright. All right, Watcher. What I do need is some more Diet Coke. We got Soho House Fridays coming up. We got big week. It's time to go, man. I mean, there's nothing else to do in this world. Stack them, flip them, hodl them. Bankers are coming for your coins. Don't let them take them. Find us tomorrow, midday. Very calmly. We're going to go on stream tomorrow. Okay? Everything's going to be okay, guys. We're going to the moon. I promise you we're going to do well. Rob, let's go. 1-800-BIT-ANDY. This is like that one song where it's like, I don't know what it is. That's
Hotline Bling.
Yeah, there it is. That one. There it is. Let's get some sounds for that one. Come on.
No. We don't want to get YouTube copyrighted as soon as we wrap up
guys, thank you.
Banger show.
You make the show so possible. We really appreciate you guys tuning in every day. This is just the beginning. Lighter has some huge news with Robinhood Chain tomorrow. Hyperliquid looks fantastic. Zcash, you want to get as much of that as you possibly can. Of course, sponsor of the show, Relay, Plume, Aligned, RE, 1inch, Frax, Zama, Near. Can't go wrong with these guys. We're doing great. Stack. Second half of 2026, you'll be glad that you stacked. We'll see you tomorrow. We'll be right here from the financial capital of the world. You've been watching The Rollup. Let's give Mr. Clay just some love. Guy's a legend. Hey guys, if you want to see Robbie put a suit on, let me know in the comments. Let us know if you guys want to see Robbie in a suit tomorrow. We'll make it happen. All right? All right, guys.
If